All right, let's do this. We're going on a journey, your journey actually, through the 10 levels of a hedge fund career. Picture it. You're 20 years old, you just got the one offer that matters, and you're about to step into a world that's, well, it's unlike anything else. This is the ascent.
It's your first day. You're probably expecting chaos, right? Yelling, phones ringing off the hook. But what you find is quiet. It's this tense, focused silence. The whole place smells like dry cleaning and strong espresso. And you realize this quote is spot on. It's a library, but the books are balance sheets, and every silent turn of a page is a multi-million-dollar bet.
So here you are, the intern. You shotgun 40 applications to land this one spot, and now you're sitting next to some kid from Wharton who's rattling off acronyms you've never even heard of. You just nod along, pretending you get it, because you figure out rule number 1 very quickly. Pretend until you actually do.
Now, your actual tasks are anything but glamorous. You're pulling data from a Bloomberg terminal, you're building endless spreadsheets, and you're taking notes in meetings about trades bigger than your parents' house. The real job, though, it's being invisible but indispensable. You learn to get the coffee before anyone has to ask, you stay later than everyone else, you just become part of the furniture.
And then there's the unspoken math of the summer. See, there are 8 of your interns, but there are only 2, maybe 3, full-time offers on the table. So while everyone's super friendly on the surface, grabbing lunch together, underneath it all, it is a silent, ruthless competition. And you notice everyone starts staying just a little bit later each night.
But you make it. At the end of the summer, you get the handshake. You're in. Welcome to Level 2, the junior analyst. The title sounds better, but the real job description is simple. You do everything no one else wants to do. This is where you're really forged.
These are your hours now. Get in at 7 in the morning, leave at 9 at night. And that's on a good day. You're not making big calls yet, you're just feeding the machine. You're screening stocks, building models, basically living inside of Excel. And yeah, you're making more money than you've ever seen, but you have literally 0 time to spend it.
And this is where your life really splits from your friends back home. They're posting pictures from Europe. You're building 40-tab financial models. You're missing birthdays. You're canceling plans. After a while, they kind of stop inviting you because they know your maybe always means no. It's just the price of admission. You'll spend 2 solid weeks on an idea. Pour your life into it. Build the model. Write the memo. You're absolutely convinced it's a winner. You go pitch it to the portfolio manager, and he kills it in 4 minutes flat. 6 words. That's all it takes. You learn by failing very publicly, in front of people who just don't have time to be gentle about it.
And that's when you finally get what fuels this entire world. It's not just a fear of failure. It's something deeper. See, everyone here was the smartest person in their old high school. Here, they're just part of the pack. The real engine of this place is a deep, profound fear of being ordinary. Because average just doesn't cut it here. After 2 years of that grind, you survive. And that little word junior, it finally drops off your title. You're an analyst now. You own a whole sector. You're expected to know more about your 30 companies than pretty much anyone else live. The training wheels are officially off.
So, you spend a solid month on your first real idea. You've got a 60-page deck, this elegant, complex model, and you walk into the PM's office ready for a deep dive, and he just looks at you and says, "Give me the thesis in 2 sentences." Your entire month's work boiled down to about 20 words. The pressure is just immense.
But you do it. You deliver. He asks maybe 3 sharp questions, and then he just nods and puts $40 million into the position. You walk back to your desk, and your hands are literally shaking. $40 million, riding on your judgment, your research, a conclusion you came to alone at midnight. For 3 weeks, nothing happens. You question every assumption you made. Then, the company reports earnings, and you are right. Spot on. The stock pops. The fund makes $6 million overnight. It is the most intense feeling of validation you've ever had.
The next morning, the portfolio manager walks by your desk, doesn't even break stride, and just says those 2 words. Nice call. In this world where praise is the rarest currency there is, that feels like a standing ovation. And you've just learned the most important rule. You're only as good as your last idea. So now, the career path starts to shift. You've proven you can generate ideas that make money, again and again. But the next step, it isn't just about being right anymore. It's about managing capital, managing risk, and maybe hardest of all, managing yourself. You're on the path to becoming a portfolio manager.
Eventually, you get your own book, a slice of the firm's capital, maybe 50, maybe $100 million, and it's all yours to manage. You're a PM now.
Every decision, every gain, every loss, it's yours. There is no one else to blame. It's the purest meritocracy you can find because your performance is a single number that everyone can see.
And the pressure completely changes. Your hours might even get a little better, but the stress is something else entirely. It's this constant psychological weight of knowing that real money, your investor's money, is on the line 24/7. That feeling never, ever turns off.
Years pass. Your track record is consistent, which, in this business, is spectacular. And your focus begins to shift again. It's not just about your own profit and loss anymore. It's about the future of the firm. You move from managing a portfolio to managing the whole machine. You become an executive.
So now your role could be director of research, where you're hiring the next generation of hungry analysts. Or maybe chief investment officer, managing risk across the entire firm. Or you become a managing partner, actually operating the fund as a billion-dollar enterprise, dealing with investors and that famous 2-and-20 fee structure.
And that brings us to the final level, the very top of the pyramid, the founder, the person who started it all 20 years ago with just $50 million and a core belief that they had an edge nobody else did.
The growth is just staggering to look at. $50 million in year 1 to $500 million in year 5, then $5 billion, and now $15 billion in assets. Every single time a new zero was added, the entire nature of the business, the risks, and the founder's job completely changed.
And this really gets at the founder's paradox. At the start, with $50 million, you were a trader. Now, with $15 billion, you're an institution. You're a target for regulators, for competitors, for the press. The great irony is that massive success just makes everything so much harder.
So what was the one skill that it took to build all this? It wasn't just being a genius. This industry is a graveyard of smart people who failed. What it really took was a rare kind of resilience. The ability to be wrong, to lose hundreds of millions of dollars in a bad quarter, and still have the clarity and conviction to make the very next decision.
So we end right where we began. Somewhere, right now, some kid is skipping a party to read an annual report. He's going to apply for that internship, and he'll get one offer, because one is all he needs. He has no idea what he's truly walking into. But after going on this whole journey, do you?